please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The rupee clearly is in focus as it is trading at its 6-month low. Manisha Gupta now joins us with all the detail. Manisha, good morning. Tell us what are the factors that are leading to this movement in the rupee?
Well, plenty, and it has really been coming, but the kind of decline that we have seen really seemed to have caught everybody with surprise. You are down nearly a rupee now in 2 trading sessions, and we did see the rupee decline all the way to 65.15 as well, the lowest since April 5th. But since then, we also have had the public sector banks come in and buy dollars, and that's the reason there is some support coming in, and we are trading on the better side of 65 on your screens right now. But there has been plenty happening, as you said, in the domestic markets as well. The widening fiscal deficit is one. FIs have been net sellers in the Indian equity markets in last couple of days. The inflation numbers, the IIP data, the GDP numbers, everywhere you look in sense of the Indian numbers has been on the weaker side. Add to that the global cues as well, and the Fed stance has been hawkish. There is a conversation of yet another interest rate hike in December. And of course, if you look at the Asian currencies as well, they have been declining too. In the last couple of weeks, actually, the hedge positions on the Asian currencies, actually the net longs, of course, have been on the lower side. The North Korea concerns, the rising of US dollar, all of that seems to be putting pressure there. Apart from that, one important thing is a report from the Standard Chartered Bank, which says that the Indian unhedged positions may have increased by $50 billion. This is double of what you saw a couple of years back. And that really seems to be a bit of a concern right now with the kind of volatile moves, essentially, that we have seen coming in for the rupee. This week and month, of course, is negative. But on a 2017 yearly basis, we still are up more than 5% for the Indian rupee. And the dollar index still is nearly 9% on the lower side. But as many bankers will tell you, that the volatility from here in is only going to increase. Let's also listen in to Brijen Puri of JP Morgan, who says that the best of rupee perhaps is now behind us.
The RBI has been fairly apparent in their reaction function. We've seen the RBI intervention around 63.5, 64 increase materially, even while other emerging markets and especially China continue to appreciate just relatively during that period. So it shows that at this level, the RBI really is not very comfortable with a continuing appreciation. Having said that, if the global dollar were to appreciate, rather depreciate, then the rupee would continue to appreciate, albeit with a lower beta.
Well, a lot of stocks getting smacked in the face actually as we speak. Just pull up a couple of stocks. DLF, high beta, that's getting knocked out. JSPL as well. Just pull up the intraday chart over there. That's taking a hard knock. And if you even pull up something like a Shree Cement, remember it's created a lot of wealth. Now that stock in fact is under some pressure, volumes as well picking up on that counter. So a lot of these stocks, and Divi's Laboratories has been a dream stock in the last few days. Well, there appears there is some offloading getting into this weekend. Well, on that note, me and Anisha will wrap up on Chartbusters. You stay with us. Trading Hour comes up next.